Hi, this is Tony at Cover. I'm speaking to Harry Joffe, the head of legal at Discovery Life. Harry, long time no speak. Thank you very much for chatting to me again today.
Pleasure, Tony. Nice to see you again after all these years, and you're still looking healthy and well. So keep it up.
Yeah, no, same on your side. It's always great to talk about innovative stuff. It can sometimes get a bit boring to talk about the same old thing all the time. And obviously, your dollar life plan is one of those things that are a bit different, especially because it speaks to a real need for South Africans, especially in with uncertainty and all of those sort of things. So maybe we can start off with you just giving us a bit of an overview as to what is the dollar life plan all about.
Thanks, Tony. So Dollar Life is, as the name would suggest, it's life cover in dollars, and the premiums are billed in dollars. So the client will select the chosen amount of cover required, just like a RAND policy. The cover will be dollar cover, and the premiums are payable in dollars. And we use one of two routes for them to pay premiums. So either they can pay using their 1 million single discretionary allowance, or SDA. And if they choose that route, it's a very simple route. We debit their RAND account, and every month we transfer the money in bulk for all our clients offshore to our Guernsey office, and we report that to SARB on the BOP forms. That's how we initially launched Dollar, and that's how we envisaged it running, because then it's simple. There's no need for ARTs or tax clearance certificates. We just debit their RAND account, we transfer offshore, and it comes off their 1 million SDA.
Okay, yeah, that was, I was going to ask, technically, how do you do this in terms of all the legal restrictions with foreign exchange controls and allowances and all of that? Do the checks and balances on your side, etc.? How does that work?
Tony, that's just the first route, because that's how we launched it, and that's how we envisaged it starting, because that's quite simple and easy to work. But of course, a couple of issues with that which made us expand the product, because South Africans, as you've just alluded to, are very mobile and are traveling around the world. And a lot of them are no longer tax residents in South Africa. Now, if you're no longer tax resident here, then your SDA falls away from the year following the year in which you gave up your tax residency. So assuming you gave it up now, from 2026, you wouldn't have the SDA, so we couldn't use that payment route for them. And of course, the irony is that most of these South Africans that are mobile would want dollar more than anything else, because they don't want a RAND policy if they're living overseas or traveling, they want dollars. So then we extended the product with SARB approval to allow for offshore payments. So a client could decide, or could have the option if they're no longer tax residents, and they can pay directly our Guernsey account with dollar cash already that they have. And then it's a simple process for them. They just do a EFT into our Guernsey account, and that's how they pay the premium from offshore. The only restriction there is because of our admin process. If they're paying an EFT, you can imagine if they're going to pay a monthly EFT, the admin will become a nightmare. So what we've done is we've made that an annual premium. So if they want to pay it from offshore, they just pay an annual premium, and then it's an EFT once a year. Then it works better for us and for them. Also, as well, sorry, one more point there, Tony. If it's a structure, because once we've opened it up to payment from offshore, then a lot of the forex restrictions fall away, because currently if you're paying using your SDA into a policy, the premium payer, the policy owner, and the life assured need to be the same person, because you can't pay for someone else's policy using your SDA. But if it's money from offshore, then of course those forex issues don't apply. So then a third party premium is allowable in terms of forex. Obviously the money laundering checks and all of that have to be done. But that's what opens it up now for a foreign trust to own the policy, or a foreign company, or even a foreign foundation to own the policy and pay the premiums. And we're starting to see quite a bit of that when it comes to the offshore business assurance route. So South Africa's got a company in Mauritius trading in Africa, owned by his foreign trust in Mauritius. And he's got a partner, also the foreign trust, that owns shares in that company. We can now let them do a foreign buy and sell with dollar policies owned by their foreign trust, paid by premiums from offshore. And that's made it really interesting now. We're starting to see fascinating structures that get me up in the morning, let's put it that way.
Yes, yeah. I was going to ask, do you guys track in some way what the motivations are, why people take the dollar life plan?
Yeah, so that's a good question, Tony. So It's not just a single need. So you might find, for example, the obvious need, a client is living overseas and wants dollars. So that's a very obvious need. Or the client who lives in South Africa, but all his family are living overseas. So when he dies, he wants dollars to pay to the family and he doesn't want forex restrictions. You'll know how tricky it is for a South African estate or a South African life policy to pay offshore.
Yeah.
I mean, it can happen. You can get the approvals or you can get the ARTs. Or it can work, but it just takes time and it's an admin process. Whereas if you've got a dollar policy, it's already an offshore policy. Dad dies here. His son's living in Ireland, working in an IT company. The dollar policy will pay it into a bank account in Ireland because dollar is an offshore policy. So it pays out in dollars anywhere in the world. And that's a nice need for a lot of South Africans with family overseas. And then the third one, which is really interesting and becoming more and more relevant, is South African lives here, but he's got, say, a fixed property in London or in New York, particularly in the US and the UK, which, as you'll know, apply what we call citrus tax when a person dies. So if you die in South Africa, you've got your flat in London, you'll be paying 40% citrus tax potentially above the rebates in the UK. And then, of course, how does a South African estate pay that offshore citrus tax? They don't have foreign cash or foreign currency and they can't raise it. And we find dollars a very nice way to create foreign liquidity or foreign cash to pay these offshore citrus taxes. And that's becoming quite a big need for South Africans.
Yeah, it makes a lot of sense there to do that. And we do sometimes think that only wealthy people have a need for offshore, but I suppose it depends on your definition of wealthy. But this is reasonably affordable if you compare it with local life insurance. Do you find that the socioeconomic demographic goes lower into the earnings spectrum?
So, Tony, that's a great question. Thank you. You've given me a nice excuse to talk a bit about the product. So thank you for the benefits. So the first point is that the minimum premium is $50 a month if you're using your SDA. That translates to just under R1,000, which is not a huge premium. I mean, that the average middle class person can afford that, number one. Number two, we run these special offers every year, and it depends. We might run one again now. But when we run a special offer, what we do is we lock you in at a fixed exchange rate for 3 years. And that's very neat. So the last special offer we did towards the end of last year, we locked you in at 14 Rand 90. So you were locked in for 3 years at 14 Rand 90, whatever the Rand did, unless the Rand went above, I think it was 23 Rand, and then you got a discount to the increased rate. So we lock you in at a discounted rate for a 3-year period. And then if you're on Vitality, you can get a 15% discount to whatever the exchange rate is. So we make it cheaper in that way when we give you an exchange rate discount, because obviously if you're paying in dollars, the Rand dollar rate is very changeable and flexible and movable, and your premium can go up and down. Can we try and lock the client in at a fixed rate to give them some kind of certainty? And then the third thing, Tony, and again, this is something that you'll appreciate, is a traditional South African Rand policy is normally estate dutiable. It's normally a deemed asset in the estate. Of course, if it's a buy and sell or a key man or the spouse is the beneficiary, you could avoid it. But generally, in the main, a Rand policy is estate dutiable. Dollar Life is not a South African domestic policy. It's issued through our Guernsey office. It pays out only to a foreign bank account. And we're strict on that. It can only pay to a offshore bank account outside South Africa. And that means it's not a domestic policy and it doesn't then fall into Section 33A of the Estate Duty Act. So it's actually free of estate duty quite legally and legitimately.
Okay.
And that's a major plus. Yeah, because if you compare that to a Rand policy, you're saving 20% of the proceeds. That in effect makes it cheaper. Even if it's the same, you're getting 20% more cover, or you can drop your premium back because your cover is free of estate duty. And that's a major plus, which we find.
Yeah, absolutely. And can you build in escalations like you do with normal policies?
Yes, so there's different funding patterns. Exactly. There's 3 different funding patterns that you can build in, and the actuaries have devised all of these things. So you can have a 0%, 5%. There's all these different funding patterns you build in. And as I said, what's so useful is that it can pay to a foreign trust. So it only pays to a foreign bank account. But if you pay it to a foreign trust, then of course there's no estate duty for the family either, because then it's sitting in a foreign trust until it comes out the trust, no one owns it. And because it wasn't introduced into that foreign trust by way of a loan account, Dad died, the policy pays directly to the trust. None of the anti-avoidance laws catch it in this foreign trust. So we find that quite useful as well. And what we've done as well, on top of that, because these foreign trusts are really expensive, so it can cost you $6,000-7,000 a year easily for a foreign trust. We've created a short form foreign trust. And that's, the various names for that. There's a bottom drawer trust or a dry trust, freezer trust, whatever. We call it a short form trust. And that's a trust which we set up through a partner trust company in Mauritius. And it's a trust which is only a beneficiary of our dollar life policy. That's set up, it sits there in the background. When someone dies, then the trust springs into life and it accepts the proceeds. And that's a much cheaper trust at only $450 a year. We find that also very useful to complete the estate plan for everyone, even the middle class individual.
People taking that up.
And I tell you why, Tony, again, we're getting a bit technical, but I think it's useful for our viewers or our listeners. If you've got a single parent, for example, so we had a few cases, you've got a single mom, she's got a minor kid, a 5-year-old kid, she's taking out dollar life for whatever purpose. If she dies, the offshore dollars can't pay into a foreign bank account for a 5-year-old kid. Now the kid can't open a foreign bank account. So we find those kind of clients want the short form trust as a beneficiary to protect the proceeds for the kid. We're finding as well, there are a lot of other needs for the short form trust. So for example, back to our citrus tax case. So you're a South African, you're living here, you've got this property in London. When you die, you want your dollar policy to settle your citrus tax. But who do you make the beneficiary of the policy? If you make a spouse or your family, they could just spend the money and not settle the citrus tax.
Yeah.
So what the clients say, they would like to have this short form trust. It's a beneficiary. They have a letter of wishes to the trust company, which says, when they die, please use the money to settle any citrus taxes first. And then they know that everything's taken care of. They've got quite a simple but neat structure, and your citrus taxes are looked after. So a lot of needs for that short form trust. If you want a specific purpose for that policy, you want to make sure it gets achieved.
Yes, because we know that you have to make that process after death as simple as possible for whoever's left behind, because most of the time, the main life insured, which is the father or the husband in most cases, was the one that knew the technicalities and admin and processes and all of that, and whoever's left behind it has no idea.
Correct. And that's what's nice to have this trust company involved with the letter of wishes, so that they can say to the family, look, your policy, your late husband's policy paid out $1 million. We're going to use $750,000 to pay the citrus taxes, the other $250,000 for you. It's, as you say, simple, clear. Everyone knows where they stand, and it's run independently. So those things are going to be sorted out properly.
Yeah. And just as a financial advisor, how do you access that process of setting up the trust, etc., to assist from a discovery
Yes,
side?
correct. So what will happen is the financial advisor will sell the dollar life policy to the client. They'll then come to us and say, we need a short form trust to be the beneficiary. We'll refer them to this trust company in Mauritius, which we use, and they know all about it. We've had plenty of time with them. We've actually trained them on the product. They understand how the product works. And then they will go through the process with the client to set up a short form trust. The anti-money laundering stuff, the KYC, which will have to be done, but they do that all on their end.
Oh, that's a no-brainer then for advisors to include that in every conversation that they're having.
Exactly, because it just means you don't need any issue in your will, or it's a simple estate plan you've now got. It's all taken care of through that short form trust. Now, we find other interesting issues or uses for a Tony for example, when there's a share buyback or some kind of shared transaction, you might want a trust involved to receive the proceeds. And you want to make sure these proceeds are used for the right purpose. So you might have an offshore company which you own the shares personally, and your partner might also own, say, 50% of the shares. So you want to take out a dollar policy to fund the buy and sell, but you want to make sure these proceeds are used properly. Someone doesn't take the money and run off with it. You can interpose that short form trust as well. So we're finding that too quite useful.
Yeah. And maybe just in closing of the conversation, I saw that there's been a big increase since you launched. I think you launched in 2024 somewhere. Since you launched it, there's been a big increase in uptake. And do you have any idea why that is? Is there a feeling on your side as to why it's increased? Is it maybe just that people are becoming more aware, or advisors are becoming more aware?
So Tony, we actually launched it in 2014. So it's been going just over 10 years now.
Oh, sorry, man.
Don't worry. But I mean, it's a good point you make, because the Dollar Life version you see now is way different to where it launched in 2014. So, when we launched in 2014 with a simple product, it basically had life and disability and some severe illness, and it was paid only through the SDA. Product you see now in 2025 has got a lot more benefits. The severe illness and the disability is much more comprehensive. There's even what we call a global education benefit, where you can add this benefit on, and then your kids' schooling overseas gets paid for, potentially even at Harvard or Columbia, if that's where you want them to go. So the product has become much more advanced. The premium mechanism, as I say, is more advanced, because now you can pay from offshore using offshore money. We now allow an offshore trust to own, or offshore company. We're doing our first offshore foundation now. So that's more advanced. The whole processes have become more advanced, and we've now got the short form trust we've introduced. So we are gradually ramping it up. And then we have these special offers now, which we've introduced. So it's become, it's always like that. You launch a new product, which you think is fantastic, and you think this is what the product's going to be used for. And then suddenly you find the advisors have taken it onto a new level, and they need this done, and they're using it for that. And I'll give you a great example. This is actually flummoxed me. So we thought Dollar would be used for offshore Cyprus taxes. That's the way we saw it being used. But last year I got a call from a broker in George, and he says to me, he's got a single client in George with 100 million rand estate, and he wants to use Dollar to pay South African estate duty. Now, first I thought he was a bit crazy, but then we sat down and we discussed it, and it actually makes perfect sense, because if he's going to take a Rand policy to cover his Rand estate duty, that policy is going to be estate dutiable. To cover, he's got 100 million Rand plus estate. So to cover his 25 million duty, it's going to cost him 33 million in Rand cover to clear the 25%, to pay the 25 million. If he takes a Dollar policy, then there's no estate duty, so he doesn't have to upsell, and he doesn't have to waste 33% premium. The only problem was the broker wasn't sure who does the policy pay to. And here we introduced the short form trust. So that policy is going to pay to the short form trust in Mauritius. Letter of wishes to the trust company to say, please use the dollars to pay SARS in South Africa the estate duty that's owing directly to the SARS account. And then we've got, again, a structure where the client is not paying the estate duty on the policy. He's saving 33% of the premium, which covers the short form trust and a whole lot more. And this is something we have never thought of, but the broker figured it out. And now we've got a whole new angle to discuss with clients. And that's how this policy has grown and meandered and evolved to something much more short.
That's how most innovation happens. Somebody has an initial idea, and then it grows with input and how it's being used, because there's so many people out there with different needs, but you can't fathom in the beginning.
Exactly. And in each case we learn, and then we say great idea, and then we try, and the product evolves even further, and we make it more useful for clients. And that's the point. That's what's now become, as you hit the nail on the head, it's not just a high net worth product at all. It's for middle class people. I'll give you one more case if we got time. We had a case where the client wants to leave assets to his kids. He said to me, my wife's getting all my group life payouts, all my retirement funds, because she's a dependent. She's well more than looked after. I want to leave something to my kids. But if he leaves assets to his kids, of course, they're estate dutiable, because there's no full fee deduction. So I said to him, why don't you take a Dollar policy and make the kids the beneficiaries of that, because there's no estate duty? Now, what a simple, neat solution. We've got his middle class dad leaving $500,000 to his two kids. They're getting a very nice inheritance offshore, no estate duty to him. It's like a win-win. And that was something we hadn't thought of. And now you've got middle class clients that are taking it. So again, that's how this thing evolves and grows.
Yeah, no, it's brilliant. I love innovation, and from a discovery point of view, you guys are really doing it. So well done.
Thanks, Tony. What I love, I must be honest, I love it when a financial advisor teaches us stuff, because they're at the sharp end. We think we're so brilliant, and we sit in our ivory towers pontificating about all these great ideas. And then a financial advisor comes to us and says, what about this need? And it's something we had never thought of, because we're not at the sharp end, and it's a great idea. And then we can evolve our product or make it work even better. And that's exactly the point.
That's exactly, brilliant. Harry, thank you so much. It was great chatting to you and catching up, and well done on a great innovative thing.
Thank you, Tony. Thanks for the discussion. Really enjoyed it.